The cryptocurrency market is experiencing a significant rebound, led by Bitcoin and Ethereum, amid ongoing regulatory developments. From ETF applications to legislative hurdles, the landscape is rapidly evolving. Here are today's top 10 stories you need to know. Investor attention is beginning to expand beyond the established giants of Bitcoin and Ethereum as high-volatility tokens gain traction. Recent trends show that names like Zora and Vine are capturing interest, with Vine experiencing an impressive 86% increase in value over the past 24 hours. This shift indicates a growing willingness among traders to explore speculative opportunities and real use case infrastructure themes. The market is buzzing with stories surrounding XRP's potential in global payments and Kraken's introduction of crypto perpetual futures for eligible U.S. traders. These developments reflect a broader narrative where traders are not only chasing momentum, but also considering the utility and application of various tokens. As the market evolves, the exploration of high-volatility assets may lead to increased diversity within investors' portfolios. Looking ahead, the ongoing interest in these tokens will likely shape the future landscape of cryptocurrency investments. European compliance risks are increasingly coming to the forefront as the MiCA regime approaches its implementation deadline. Reports suggest that up to 75% of EU crypto firms may lose their licenses on July 1st, creating a significant structural challenge for the industry. The potential loss of licenses could impact custody, listings, and distribution for many crypto businesses, leading to a ripple effect across the market. This situation poses a severe risk to the operational viability of numerous exchanges and service providers within the European Union. As firms scramble to comply with the new regulations, the urgency of the situation is palpable. The outcome of this regulatory shift could reshape the European crypto landscape, impacting investor confidence and market stability. In the coming weeks, the focus will be on how companies adapt to these regulations and the implications for their business models. The landscape of U.S. cryptocurrency legislation remains uncertain as the Clarity Act continues to face delays in Congress. The legislative framework for digital assets is crucial for establishing clear guidelines for market participants, yet the August recess has emerged as a new target for potential passage. The ongoing stagnation in legislative progress creates a backdrop of policy uncertainty, which traders are factoring into their market strategies. This environment of ambiguity affects how investors perceive risk and opportunity within the cryptocurrency space. Without a clear regulatory framework, U.S. markets continue to operate under a regulatory discount, which can impact pricing and investor sentiment. As discussions around this legislation continue, the cryptocurrency market will be watching closely for any signs of movement or change. Moving forward, the fate of the Clarity Act will be a critical aspect influencing market behavior and investor confidence. This accumulation trend suggests that Bitcoin and Ethereum are increasingly becoming integrated into traditional financial frameworks. As institutional investors continue to navigate the evolving landscape of digital assets, their influence will likely shape market dynamics significantly. In the coming months, we can expect these investments to drive further innovation and regulatory engagement in the sector. Solana remains in the spotlight due to its innovative product momentum and upcoming network upgrades. The anticipation surrounding the pending Spot Solana ETF application and the forthcoming Alpenglow upgrade has captured the attention of investors. This upgrade aims to enhance the network's finality and data propagation capabilities, critical for its long-term success in a competitive blockchain market. Solana's focus on speed and efficiency positions it as a formidable player among established cryptocurrencies. The growing institutional interest underscores a shift towards recognizing the potential of scalable blockchain solutions. Analysts believe that Solana's technical roadmap could significantly impact market dynamics, attracting more developers and projects to its ecosystem. The positive sentiment surrounding Solana suggests that it may play a pivotal role in shaping the future of decentralized finance and NFTs. As the Alpenglow upgrade approaches, expectations are high that it will drive further growth, solidifying Solana's reputation as a leading platform capable of supporting high transaction volumes and innovative applications. The ongoing discussions surrounding cryptocurrency ETFs have emerged as a pivotal driver of market activity. The U.S. Securities and Exchange Commission faces a crucial deadline on March 27, 2026, to rule on an unprecedented 91 pending crypto ETF applications, including those for prominent cryptocurrencies like XRP and Solana. This concentration of forthcoming decisions is critical, as investor sentiment often hinges on the approval of these financial products. Historically, ETF approvals have been known to trigger significant price movements as they provide mainstream access to digital assets. The potential for ETF approvals may also compress volatility in the lead-up to these decisions, presenting strategic trading opportunities for savvy investors. Market analysts emphasize that positive regulatory outcomes could not only boost prices, but also enhance overall market stability. As the cryptocurrency ecosystem braces for these pivotal rulings, the focus will remain on how regulatory bodies respond to these applications. The outcomes could reshape investor strategies and influence market dynamics in the months ahead, particularly as the deadline approaches. XRP remains a focal point in the cryptocurrency market, especially as it relates to ongoing regulatory discussions. Ripple's partial legal victory in 2023 has set a precedent, affirming that XRP is not a security in certain contexts, which has instilled a sense of optimism among investors. This pivotal ruling has sparked heightened interest in the potential approval of a spot XRP ETF application, a move that could significantly enhance XRP's legitimacy and accessibility. As the market increasingly views XRP as a proxy for regulatory clarity in the crypto space, traders are closely monitoring price movements, which reflect broader sentiments surrounding digital asset regulations. The implications of these developments are profound. A successful navigation of regulatory hurdles could usher in increased institutional interest and investment in XRP, potentially transforming its market position. Moreover, as regulatory frameworks evolve, XRP's trajectory will remain closely tied to these changes, making it a crucial asset to watch. In the coming months, XRP's performance will likely provide critical insights into the future of cryptocurrency regulations and market dynamics. Bitcoin has recently experienced gains, yet its price movement is being constrained by dynamics related to exchange-traded funds, ETFs, and existing technical resistance levels. Analysts report that while there is sufficient demand for Bitcoin to drive prices upward, it lacks the strength to combat selling pressure from profit-taking and ETF outflows. Historically, the approval of Bitcoin ETFs has been seen as a pivotal moment for institutional adoption, which could greatly influence market sentiment. Currently, the market appears cautiously optimistic, but remains susceptible to significant fluctuations. Investors are acutely aware that the fate of pending ETF applications could have profound implications for Bitcoin's price trajectory. The current market conditions reveal a precarious balance. There is enough investor interest to support price increases, yet the specter of profit-taking, combined with regulatory uncertainties, poses a serious threat. As Bitcoin navigates this complex landscape, traders are closely monitoring upcoming ETF decisions and their potential market impact. In the coming weeks, the relationship between investor sentiment and ETF developments will be critical in determining Bitcoin's immediate future. Ethereum has also seen a positive turn, trading at approximately 1,780.86 cents, reflecting a 2.64% increase. This participation in the market rebound underscores a broader interest among investors who are diversifying their portfolios beyond Bitcoin. Historically, Ethereum has been the second largest cryptocurrency by market capitalization, often seen as a barometer for altcoin performance. The uptick in Ethereum's value indicates a healthy market sentiment, as larger cap cryptocurrencies are gaining traction alongside Bitcoin. This resurgence is fueled by growing institutional interest and the potential applications of Ethereum's smart contract technology, which are increasingly being adopted in various sectors. The rising interest in Ethereum suggests a shift in investor strategy, focusing not only on Bitcoin but also on assets that exhibit strong potential for growth. As Ethereum continues to perform well, it may lead to enhanced market breadth, encouraging further investments in other altcoins. The next steps for Ethereum will revolve around its ability to maintain this upward trajectory, especially as it faces competition from innovative blockchain technologies and evolving market dynamics. Investors will be closely monitoring Ethereum's scalability solutions and upcoming upgrades, which could further solidify its position in the cryptocurrency landscape. Bitcoin has shown notable gains, trading around $65,700, marking a 2% increase in value. This surge is largely attributed to easing tensions following a recent U.S.-Iran deal that alleviated fears surrounding oil prices and geopolitical instability. The agreement has provided a sense of relief in global markets, allowing investors to shift their focus towards alternative assets such as cryptocurrencies. Analysts suggest that Bitcoin's current rally is more a reaction to broader macroeconomic factors rather than specific developments within the cryptocurrency sphere. The fragility of this move is apparent. While the price increase indicates positive sentiment, it also carries the risk of a quick reversal if macro conditions change unexpectedly. Investors are closely monitoring the situation, particularly as Bitcoin's price action is still being influenced by external pressures, including ETF outflows and technical resistance levels. The market's reaction suggests that traders are cautiously optimistic but remain aware of possible volatility ahead. As Bitcoin continues to navigate these turbulent waters, its ability to maintain momentum will be tested against upcoming macroeconomic indicators and shifts in market sentiment. Looking ahead, Bitcoin's performance will likely hinge on both global economic conditions and regulatory developments, with a critical eye on inflation data and interest rate decisions that could shape investor behavior in the coming weeks. Thank you for watching. Which story surprised you the most? Don't forget to like and subscribe for more updates.